Darin Newsom from DTN is our market analyst this week. The USDA Tuesday released its quarterly estimates on U.S. grain stocks. The agency totaled all old crop corn stocks at 1.24 billion bushels, up 50% from a year ago. It projected old crop soybean stocks at 92 million bushels, down 35% from September 1st, 2013. A day earlier in the weekly crop progress reports, we saw just how slowly the U.S. harvest has been going. All of the top 18 corn-producing states are lagging behind their 5-year averages for completion. Specifically, Nebraska is 9 points back in corn and 11 points behind its 5-year average in soybean harvest. We talked with Darin Thursday about price targets for selling the 2014 crop, basis numbers as harvest moves on, and his reaction to Tuesday's report.
Usually the September 30th quarterly stocks numbers don't carry a lot of weight in the market, and this one, for the most part, was not out of line. The most interesting number I saw, and the one that I think will be remembered for years to come, was the soybean quarterly stocks number coming in at 92 million bushels. This is the first time USDA, at least in going back to the early 1970s, this is the first time USDA has gone below the 100 million bushel mark. Now, what's interesting about this is that for months now, the market has known stocks were tighter than what was being said in the USDA monthly supply and demand reports, yet USDA continued to adjust its residual use category into deeper negative numbers to maintain a bottom line in ending stocks. This time around, they couldn't do that. They reported what they found in the on stocks and on in stocks right now, or at the beginning of September, and it came out less than 100 million bushels. So the market reacted by rallying off its low, but by the end of the day, we were back near its lows. All the grains were under pressure, basically because nobody cares about quarterly stocks right now. Everyone's looking ahead towards what's expected to be record production in both corn and soybeans.
Give me an idea of where we currently stand with both corn and soybean prices relative to the last 5 years or so.
Yeah, if we look at both the December and November futures contracts in corn and beans, and if we look at DTN National Cash Indexes, which is the national cash average prices for those two markets as we head into harvest, both of them are at or near the lowest price levels we've seen going back to the 2009 timeframe. So we're near those 5-year lows right now. Some markets are actually setting new 5-year lows. So we have been under pressure. The anticipation for this record production, record crops, rebuilding of stockpiles have the market going lower, testing these areas that we have not seen since 2009.
From the harvest numbers that we're seeing so far, does it look like that big expectation of a harvest is going to pay off?
From the early results, it looks like those high expectations of yields are going to probably come true. The thing is, as similar to what we saw in 2009, as we move through harvest here, if it continues to get delayed by big rain events and pushed back further and further, we may not know for quite some time what final yields actually were. We could continue to see adjustments. Maybe we start to take the top off of some of these markets. Maybe we start to see yield estimates coming down in both corn and soybeans. We won't know. But the early results certainly look like it confirms all of this talk that weather was perfect, was able to produce this huge crop. Certainly looks like it could be confirming these ideas of record production.
Where do you think basis numbers move both in corn and soybeans here over the next month?
Over the last month, and what's interesting about not having any soybean stocks, I mean, we were scraping the bottom of the barrel, which is what we were finally told on Tuesday, is that soybean basis has collapsed in the face of new soybeans being harvested, making their way to port, will soon be on ships, heading elsewhere. Corn basis also has been coming down. So it looks like right now, basis has weakened. There's two different paths we could take here. If harvest starts to pick up momentum and we get closer to average and weather really doesn't play much of a role, I would anticipate basis continuing to weaken a little bit, heading into our normal seasonal lows here over the fall. But however, If we see weather play a role and we really slam the door and we shut down soybean harvest in particular, bean basis may actually try to come back because of the sell-off that we've seen in the futures, how low the market is, farmers not willing to sell, and still a great deal of export demand, particularly from China. We could start to see basis begin to strengthen again. So I think a lot of it's going to have to do with weather. Weather backs off, lets harvest get going. I think basis could be weaker. If not, maybe soybean basis starts to firm.
All right, here's the moneymaker then. When you bring in this crop of both corn and soybeans, do you have an idea of where you think farmers might want to start targeting sales?
You know, it's really difficult down here because as we talked earlier, we're near 5-year lows and nobody really likes to sell in a hole. What we have to do is look at what the market's telling us. There's more carry as far as what in other words, the price difference between contracts in the corn market than there is in soybeans. And that's saying if you've got the corn market hedged, if you've got sales already in place, use the carry to your advantage, roll them out, wait for some better opportunities. And the soybeans, without much carry in the future spread, saying the market needs your grain now, and now we know why, because there was no leftover stocks, to go ahead and sell it into the market. The problem is, again, the prices are so low. So I think everyone's going to sit back, and I think we're going to have to wait to see if the markets can rally. Maybe get 20, 30 cent rally in corn, maybe 30, 40, 50 cent rally in soybeans for whatever reason, possibly weather related, possibly because we've got more export demand than anticipated. I don't think anyone's going to be in a hurry right now. The last few years have been pretty good. I think everyone is going to sit back and wait for some better opportunities, say 30, 40, 60 days down the road.
Well, I assume that nobody's going to be in a hurry for 2015 either, but do you have some maybe thoughts about, with this big crop coming in both corn and beans, what you should look for that 2015 crop?
Yeah, I think the 2015 is going to start to get interesting because the early talk is that we're going to see another round of switching of acres or moving of acres from corn to soybeans, that corn could lose more ground. So what it sets up is this potential rally similar to what we saw in 2014, the spring rally in the corn market. Now with soybeans, I think it's going to be difficult to get 2015 to rally very much. Not only are we going to be dealing with the potential record crop here in the United States, South America's next crop is also supposed to be record large. And so if we start to combine those, by the time we get into late fall, early winter, we could be looking at huge world supplies available, really keeping a lid on potential rallies in beans. So I don't think we're going to be I think we can't be quite as picky in soybeans, but we may have some time, we may have some more potential in the 2015 corn market.
The October crop report is next Friday. What are your expectations going into it?
Usually in the October report, that's where we see some acreage revisions. And this is one of the ways that we could take a little bit of the top out of the corn market. Let's say we back off corn acres by 1 million, harvested acres, planted acres. We bring the whole package down by about 1 million. That will buffer, or at least it'll offset some of the anticipated increase in national average yield. So I think we could see, it's possible that we could see corn production backed off slightly, meaning then that September could have been the most bearish number that we saw as far as production, ending stocks, and so on. On the soybean side, it may be just the reverse. We could actually see maybe acres holding relatively firm, not changing all that much, but yield bumping up a little bit. So we could actually see soybean production going up a little bit more. Neither of those two scenarios would be that surprising in this October report.